Hi everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, July 10th, 2019, and we are again in the final hour of the trading day. In my opinion, the prices that are as close to the close as possible are the most valid prices of the day, and therefore the best prices to make your buying and selling decisions from. So, that's one of the reasons why I really like to trade at the end of the day, among other reasons. And I'll get into that in just a little bit. But first of all, let me just make sure everyone can hear me. Hey, Scott Montgomery, big day for news. Sheesh. Yes, it is a big day for news. Kind of an interesting day with the testimony of Jay Powell in front of Congress. So anyway, we'll be taking that into consideration. Nice to see you, Scott. Thank you for coming by. So it looks like you can hear me okay. That's great. We are having an up day today. The Dow's up 77 points. It's up 0.28%. The NASDAQ is up 52 points, 0.65%. And the S&P is up about 12 points, about 0.4%. So we are having an up day. We were higher earlier in the day. We have come off of our highs pretty strongly, actually, in a lot of stocks and in indices. So anyway, it should be interesting last hour of the day. So the plan for today, as usual, is first of all, we're just going to have to go ahead and run that U.S. legal disclaimer. That's about 40 seconds. Then we're going to come back. We're going to take a look at all my current positions. We're going to take a look at when I bought them, why I bought them, and how I'm going to manage the trades going forward, both to the upside if it keeps going our way or to the downside if it goes against us. So, and then after that, I'm going to do a few minutes on some trader psychology, which is always important. And then we're going to come back. We're going to go through my watch list. We're going to go through each stock one by one. We're going to look at the technicals, and we're going to analyze support and resistance levels. We're going to take a look at moving averages. We're going to take a look at ATR channels, volatility. We're going to look for V1, V2 possible entries if everything lines up correctly. We're going to look at RSI levels. So we're going to do all the stuff that I do, which is my process of buying and selling stocks. So, and then after that, if after the market closes, if you have any questions at all about anything I discussed today, any trade I took today, why I did it, if you're not clear, don't be shy. Please just go ahead and after the market closes, type in your question, and I'm happy to clarify that for you. And then also, if you have any particular stocks that you would like me to look at, I'm more than happy to do that as well. So that's the plan. Sound good? JT says, yep, can hear you. Hey, that's good. Good to see you, JT. Appreciate you coming by as always. So, all right. Well, first of all, let's go ahead and run that legal disclaimer, get that out of the way, and I'll be back in about 40 seconds. So hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. So, all right, well, let's get down to it. So let's go through my current positions first. We'll talk about when I bought them and why I bought them and how I'm going to manage them going forward. So first on deck is, actually, Etsy's first on deck. Let's go back to Etsy right here. All right, so I did buy Etsy yesterday. I bought it at Yeah, I bought it yesterday on the 9th of July. I bought it at 66.82. And why did I buy it? Well, for a few reasons. Mainly, we had this big, strong momentum bar up that took out all the moving averages. So now all these moving averages are now on the downside of the price, theoretically giving us some support. So we did have a nice move up. We're still in the channel. The ATR channel is this green line above and this green line below. We did take out a fractal yesterday. This is a fractal here. A fractal is a high point that has two lower highs to the left, two lower highs to the right. We also, the RSI was still in the 50s, which I like. I like to buy between 50 and 60 RSI, targeting the 70 RSI. We also had a 520 crossover, which never hurts. And MACD went positive, and we had strong volume. So all these indicators lining up showed me that, there's something changing on this chart. There's some upward momentum. There's some explosive upward momentum. So I did go ahead and buy it yesterday at the close at 66.82. I only took a 1/2 a position, and the reason why is generally if I'm gonna buy after one of these big large bars, oftentimes, not all the time, but oftentimes you're going to get a little backfill. People are going to take profits and going to get a little backfill. So I only bought a 1/2 a position yesterday. If it comes back, and you can see it went higher today and then reverse, this is exactly the kind of thing that I get concerned about on these big bars. These big bars for me are bullish, maybe a week, within a week's time frame, 2 weeks time frame, but from a day to day, it might be a little overbought, and that's why I only bought the 1/2 position. If we can come back, close closer to the halfway of this bar, but not under the 100-day, I will add my second position. So, it's never a good idea to add to losing positions. Like if I had taken a full position here, and then if it goes down, I add another full position there, that's averaging down a loser. You really should not do that. But this is different. The intent of my trade was only take a 1/2 of my trade in case it keeps going up. I'm still happy having 1/2. But if it comes back down, then I can add my other 1/2. So you can see today I did hit one profit target today at 67.98. So I took about 12% of my position off. So the thing I like about the phasing out process and hitting my profit targets is, now we're down 10 cents on the day, but I'm up on the trade. And that's because I took a profit target up here. I just like to take profit targets when the market gives me something. It's just something I live by. If the market goes up by a certain amount during the day, I'm going to take something, not everything, right? Maybe a 10% position size, 12, 15, it depends. The higher I get to my profit target, the more percentage I take. But I just barely took this at 66.82. So I did take one profit target, got near the high of the day. It has reversed. If we come back down and we hold above the 100-day channel and get a little better price, I'll go ahead and add my 1/2. If it, like tomorrow, if it closed under the 100-day, I would not add my 1/2. I would actually just get out of the entire position. I'm using this 100-day here as my initial trailing stop. And the reason I'm picking the 100 is it's about halfway of this big bar. And when you have big bars like this, generally from a Fibonacci standpoint, you should have some support at the 50. So I like how the halfway lines up with the 50. If it loses, the 100. If it loses the 100, it also loses the halfway of that bar. So those are two negatives. So, adding that second 1/2 is going to be kind of a thread the needle kind of a thing. But if tomorrow it comes down, tests that 100 and then closes back above, then I will add the second 1/2 there for sure. So that's the plan on Etsy. A close below the 100 is going to be my stop. My target is up here at the 70 RSI. So if it keeps moving up, I will just continue to phase, lowering my position size. If it goes above the 70 RSI, I'll keep what I have and I'll continue to phase out to the top unless it closes below the 70. But, for instance, tomorrow, if we went up, tag that 70 and then close back below, that would be my signal to get out. And then My signal to get out on the downside, like I just mentioned, is a close below the 100-day moving average. So I hope that makes sense. I'm glad that we hit that one profit target today for sure. All right, next up is the Russell 2000. I did buy the Russell 2000 based upon a mechanical back-tested moving average crossover system using the 50 SMA crossing over the 10 SMA crossing over the 50 SMA. This is a really good back-tested approach. It's been very profitable. Does not always win, right? You're definitely going to get losers. But with this kind of approach, you get big winners and small losers. And so the day, which was June 28th, I did buy it when the 10 crossed above the 50. This is a completely mechanical trade for me, meaning that there's only two options. If the 10 crosses back below the 50, that will be my signal to exit the trade for a loss. If it goes my way, I will continue to phase out and phase out and phase out until I am out of shares. So pretty easy. This one's on autopilot. I do like having mechanical trades and discretionary trades. I like mechanical trades because sometimes the market just trends and trends and trends. It has a big pullback, but then trends and trends and trends. But if I was trading just discretionarily, I would get out and I would never be able to get back in. So I like to vary my approaches. I like to have discretionary trades. I like to have mechanical trades. We have our overnight SPY trade, which also gives us some diversity. And I like to sell puts on options for income. So those are kind of my four approaches: discretionary, mechanical, overnight SPY, and put selling. So all right, so that is why we entered it back here at 155.88 because of the crossover. Let me take you over to the other chart here. So you can see the first day I bought it, hit two big profit targets. So took about 25% of the position off right there, right then, which is nice. Hit one other profit target here, hit another profit target today. So I'm out of about 40% of this position. And I do want to point out something. I did buy it at 155.88. Right now we're at 155.80, so close to break even. So if I would have just bought and held this trade, I literally would be break even. But because I phased out, I am definitely up on this trade because I phased out here at these higher prices, including today. So I hope that makes sense. So going forward, the 10 MA closes below the 50 MA. That is my exit. If it continues to go my way, I will just continue to phase out, phase out, phase out until I'm out of shares. So that's IWM. All right. Hey, Mount Doji. Good to see you. Thanks for coming by, man, my friend. I appreciate it. Mount Doji says, hey, everyone. I chased on an option and got punished for a loss today. Learned my lesson. Excuse me. Well, hey, maybe after the market closes, Mount Doji, you can tell us what you did. I'm curious. I'd like to see. Scott Montgomery says, Mount Doji, but you live to fight another day. Well, that's true. Hopefully it was not too large of a position size. Haha, yes, that's my favorite quote from Friday too. All right. All right, good. All right, so PayPal. I did buy PayPal back here on June 28th. And as many of you know, I like to buy when I get a V1, V2 trigger within the value zone, which is the 1 ATR, which is the green, and the negative 1 ATR, which is the green to the downside. So first of all, let's take a look and see why I bought this. Well, we made a higher high. We're way above the value zone. It comes back into value. This is fine. It doesn't mean it's crashing. It's completely normal. When you make a higher high, people take profits, and then you generally come back into the value zone. Well, here was our V2 setup. Here's day 1, day 2, day 3. Day 2 washes out or goes below day 1's low by at least a quarter ATR. Day 3, closes above day 1's close. So that is why we have a higher high, we come back down, we move sideways a little bit, we spike down, we reverse back up. My initial stop would have been a close below the halfway of the washout bar, day 2. But you can see this has moved really, really, really nicely our way. We phased out, boom, immediately here. We phased out here again. We got a couple phase outs there. And today, you can see we hit 2 more profit targets. I have about 40% of this position left. But we did get one right at the top, and then we did get one right at the open. So again, that's why I like to phase out. Now, my initial target is the 70 RSI here, okay? But I see a red flag today, which I don't like. And the red flag is today we took out the previous high, got sold into, and rejected it. So what this means is we went intraday today, we broke out into a new range. Now we're back in the old range. So that is a red flag. Just because I don't, if I have a 70 RSI, it's not black or white. It's not like it's either getting to the 70 or it's not getting to the 70. I mean, that's ideally, that's one of my exits, is if it tests the 70 and rejects it. But if I see a red flag along the way, I'm going to go ahead and just get out of the position. So I will be getting out of the position today unless this price can close back into that new range above this orange line. So, once you enter trade and it starts moving your way, it starts extending away from your entry price, then I look for red flags, possibly a close below the previous day's low. Like, let's say I didn't get out of this today. Let's say it goes up tomorrow and then closes below today's low. That would be one red flag, and I would exit the position there because I'm so far extended from my entry. But this is a red flag for me today. Here was the previous high. We poked our head above it, closed back below it. So I don't like that. So at the end of the day, unless this closes above the high of that previous high, I'm going to exit this trade. But this was a great trade. Currently, from entry to exit, about a 4.33% trade. So that's a really good trade. So thank you, PayPal. But if it closes under this orange line here, the previous high, I'm going to go ahead, just lock it in. And besides, it got up to about 66 RSI anyway. So it got, I feel like the rubber band stretching. But who knows? It could just rocket up tomorrow and I'll be out. And that's just trading, right? That's just how it happens. You're never going to get the tops and the bottoms, I promise you. So be glad, having this nice trade. All right, SPY. All right. So I did buy SPY yesterday at the close at 297.19, and I did exit it first thing this morning on the open at 298.40 for a nice gain. So in case we have some new listeners today, I want to go over this quickly, but I do buy the S&P each day at the close, and I sell it the very next day at the open first thing. So why would I do this? So this is a study from @Bespoke Invest, and it's a really powerful study. But buying the SPY at the open in the morning, selling it at the close in the afternoon, if you did that every day since 1993, you'd have actually lost 13.9%. So that's buying in the morning, selling in the evening. You would have lost 13.9% since 1993. But if you did the opposite and you bought the SPY at the close in the afternoon and you sold it first thing in the morning, the next day, first thing in the morning, since 1993, you would have actually returned 634.2%, meaning that more than all the gains in the SPY from 1993 have come from the bidding up the prices in the aftermarket, bidding up the prices in the pre-market, and then selling them into the open. So you can see the chart. The blue line here is the buy in the afternoon, sell in the morning. The orange chart down here is the buy in the morning, sell in the afternoon. So, I know some people do well with day trading, but when you look at this, it really puts it into perspective, because when you're trying to trade during the day, you're looking for moves during the day, right? Because you're not in overnight. Well, you can see the moves clearly came from overnight trading. They did not come from intraday, at least on the SPY. So that's why I'm not a big fan of day trading. You don't have the edge. Literally just holding something overnight you can see from these graphs, clearly gives you an edge. And then, Stephen Burns, who's a friend of the channel, famous author and trader and mentor and teacher and just the best guy ever. He did a more recent study on this. This study here was 634.2. This was at the beginning of January 19. He did a more recent study up till about a couple weeks ago, and the percentage was actually 712.63% return with the buy in the afternoon, sell in the morning. So that being said, you can see why I bought this yesterday at the close and then open. But the last 3 days have been losers. Look, bought here, sold here for a loss. Bought here, sold here for a loss. Bought here, sold here for a loss, right? That gets kind of old, but this can have a drawdown. It can have a drawdown for months, years. So again, as like I always mention, it's always important, everyone, to position size correctly. And when I say correctly, I mean small. A 5% of your account, 10% of your account. So if you had $10,000, a 10% would be you'd buy $1,000 worth. You're not risking 1,000. You're not risking 10%. You're buying a 10% position size of the stock. So anyway, we will be buying this again at the close of the market, and but glad to have this nice gap open for a profitable day today on this approach. All right. Hey, Andy's here. Hey, buddy. How you doing? Good to see you. Thanks for coming by. And Bruce. Good seeing you, Bruce. Bruce has been traveling around, so he hasn't been here, but glad to have him back. Made money again while we were sleeping. Thanks, Mrs. Spy. I call it Mrs. because you only get ahead of a lady is when she is sleeping. And Mount Doji says, LOL. All right. So that's Spy. All right. On to VIX. So I did buy VIX here on the 8th of July. And why did I buy it? Well, for two reasons. One, the previous day was under 30 RSI, and then the next day it closed back above 30. I like to buy things when they close under 30 and back over 30. It also closed under the channel, back over the channel, and I'll show you some examples a little later of this same type of approach, but that is why I bought it. I did buy a quarter position because VIX is very, very volatile and we're under the 200-day, but you can see the next day we gapped up, we hit some profit targets up here, which was nice. We locked in some gains up here, and then today it's gone really bad against us. But again, getting out here with two profit, I can't remember if this 2 or 3 profit targets now. It was one of the other. I think it was 2. It took about 25, no, it was about 30% of the position off here yesterday at a profit. Did go back down today. So we are underwater on the trade, but we're underwater 30% less because we took 30% off up here. So you can see it's at 32.93. So I am going to hold this unless it closes below 30 RSI. So that's the trade on VIX. I like having a little VIX here just for a little protection. But again, the protection is not just because I want a protection. And the reason I bought this was because we actually did have a signal under 30, under the 30 ATR channel, back over 30, back over the 30, the third ATR channel. And the third ATR channels are important, everyone, because see, here's the negative third ATR channel. Here's the positive third ATR channel. About 90% of all price action occurs under here and over here. So if you can get it near the low of that band, then you have more likelihood to go back up than down. Most of the time. It does not always work like that. So again, it's important just to be careful and position size. The reason people get into problems with trading and make bad decisions, it generally is not based upon on their charts as much. It's based upon they took too large a position size, then it went against them, then they didn't know what to do, then they felt married to the trade. Don't marry your trades, everyone. Date, and probably speed date. If things are going well, then let it blossom, let it grow. But if you get in a relationship with the stock and immediately you're having problems with that stock, then speed date and just get the hell out of there. All right. And I think that is it. Yeah. So quick recap, Etsy. Oh, Etsy is positive. Hit one profit target. IWM hit one profit target. PayPal hit 2 profit targets. Gonna see if that closes above that orange line. If it does, I'm gonna keep it. SPY, we're gonna buy that again at the end of the day. And VIX, I'm holding this small position until we have a close below 30. So that's the plan. All right. So I want to just do a few minutes on some trader psychology. This is from our friend Stephen Burns, and if you have not subscribed to Stephen Burns' Twitter channel, you really should. He puts out the best information. I read his information every day. I promise you, if you read everything he posts for the next week, you will be a better trader and probably a better person. But I highly recommend. It's at @SJosephBurns on Twitter. So humans are adverse to loss, and it causes them to want to hold on to losing trades and hope they come back. Humans love the instant gratification of a small gain and want to lock it in quickly. All right, does that make sense? So human beings, they are adverse to loss. So, and it causes them to want to hold on to losing trades and hope they come back. Well, if you have a loss in your trade, people do that move, that psychological move where they're like, well, it's not really a loss until I take it, until I lock it in. Well, that's bull, right? I mean, if it's a loss, it's a loss. But as I talked about a couple days ago, generally people hope that a losing trade will come back and they're afraid of a winning trade, right? You have to do the opposite. You have to hope when you're in a winning trade, hope that it's going to go higher. And you have to be scared and fearful when it goes against you. But most people get hopeful when it goes against them and fearful when it goes for them. You need to be fearful when it goes against you and hopeful when it goes forward. Humans love the instant gratification of small gains and they want to lock it in quickly. Yeah, it feels good to lock in small gains, right? But as we know, you have to give trades patience and let them bloom, let them grow into something, because you're going to have a lot of small losses. You got to have some gains to pay for those. From a evolutionary standpoint, I don't know if this is correct, but it does make sense to me anyway, is that, the reason that humans are hardwired like this, why they want to hurry and take profits, is because back when we were hunter-gatherers and agriculture and doing agriculture, we would plant a field, we'd plant some crops, and they would start to grow, and we were always scared that we were going to have some kind of frost come in or something that would destroy the crop. So over time, from an evolutionary standpoint, it felt good to hurry, and once we had a little crop, hurry and go take it. Not let it grow all the way, but hurry and go take it, because something bad might come, that frost might come. Does that make sense? So I think that's why most humans in trading are hardwired to hurry and want to take something while we have it there, because I think it goes back to our ancestors of wanting to take something while it's there. But as with most things with trading, you have to do counterintuitive things with trading. You have to fight your human nature and do the opposite of what feels good. And that's why, starting to trade, everyone, it's not about this. I mean, yes, you have to learn the setups and you have to learn the technicals, but that is not the hard part. The hard part is battling yourself, controlling your emotions, doing what does not feel good. That's really what you have to do to become good traders. You can't just... You just can't always do what feels good. Because feels good means I don't want to take this trade or I don't want to take this loss because it's going to hurt. Or I'm going to hurry and take this profit because it feels good. If it feels good in trading, generally, as a general rule of thumb, if it feels good, don't do it. I hope that makes sense. So humans are adverse to loss, and it causes them to want to hold on to losing trades and hope they come back. Humans love the instant gratification of small gains and want to lock it in quickly. So anyway, subscribe to Steve Burns at S Joseph Burns. Do yourself a favor. I think you'll really enjoy his content. All right. Let me see where we're at. We are green on the day, which is good. All right. Well, let's go down through and take a look at today. So, oh, hey, Steve. Speaking of Steve Burns, we say his name, he magically appears. Steve says, big losses are caused by stubbornness when your trade is on the wrong side of a trend. Yes, big trades are caused by stubbornness when your trade is on the wrong... Right. Big wins are caused by stubbornness. Oh, okay, I hear you. Are caused by stubbornness when your trade is on the right side of a trend. That's exactly right. That's exactly right. I was talking about that the other day. Generally, big losses come from being on the wrong side of a moving average in too large a position size. So, thank you, Steve. Good to have you. It's always a pleasure to have you here and an honor. Letting winners grow is tougher than I thought. Right? It is tough, Mount Doji. But I'm glad you're aware of that. I still get surprised when I win so much that I don't know what to do. Well, I guess that's a good thing. Now you got to figure out what to do with those wins. All right. Well, let's go through and see if we have anything for today, everybody. All right. Apple. Well, Apple, we had that big down move a few days ago. We have rallied nicely since then. Nothing that I want to take here, though. It's too high. It's above the 1 ATR channel. We're at a 61.58 RSI. Doesn't mean that I don't think it's going to keep going. It's just that for my particular style of trading, the risk to reward ratio at these RSI levels and where we're at in the ATR channels are too high for me. All right. AGQ. Well, we almost bought this yesterday. Unfortunately, we did not get our signal. The 5 crossing over the 20 EMA. Dang it. It was like 1 penny off and had a big day. However, I will be taking this trade again today because now the 5 will close over the 20. You can see the 5 EMA is 24.13. The 20 is 24.05. Just quickly to show you a back test. This is from etfreplay.com, and I'm using this by permission. But the back test using the 5 EMA crossing over the 20 EMA since 2019, you can see it had 115.7% return, where actually just buying and holding the AGQ was a negative 60.9. So talk about a difference, right? And then the drawdown was 65.2 compared to 97. So the 5 crossing over the 20 is a good back tested. You can see over time it has back tested profitably. It doesn't have a lot of winners, only 32%, but the winners are big compared to the losers. So I will be buying this today. It's double leveraged. I will be buying a half a position because a half a position of a double leverage is like a regular position. So hope that makes sense. And I will be buying that at the end of the day today. Advanced Micro, my goodness, look at that. Woo, did not get anything on Advanced Micro, but that is one heck of a nice trade. Did test the 70 RSI today, it looks like, and you're at the 3rd ATR channel. So if I was in that trade, I would be really having my finger on the trigger to exit that, but nothing there. Amazon, boy, really moved up nicely. I did enter the, what was it now? I always forget because that one doesn't come along a lot. Yeah, the 550. I did enter the 550 right here back on 6/14 using the crossover, the 550 crossover as an entry signal, but I was only in this for a couple days because I didn't like the price action. It hit the 3rd ATR channel, and that was about it for a week. But if I would have just used this mechanically, obviously I would have had a monster trade, but I did not, which is fine. But if any of you did enter this, congratulations. That's been one heck of a trade. Another trade we had on Amazon too was when we had this close back above the 200. That's also a good back-tested approach to close above the 200. If it had closed below even by a penny, I'd have gotten out, but it went our way, and that was a nice 2-day trade. So the last 2 trades on Amazon were from here to here and from here to here. So at least we got part of that. Boeing hanging under the 200-day moving average. We talked yesterday about taking a look at the premium, selling the put down to 330. I mean, I would not mind owning it down there, but putting a lot of money to work for not a lot of premium at this point. If this gets more volatile and starts going down, then the premiums will go up, and that's maybe when I'll take a look, but not today. Alibaba, well, opened up strongly and then reversed. We are coming back into the value zone. I'd like to see this move sideways for a while. Spike to the downside, reverse back up, look for a V1, V2 entry in the value zone, but nothing there today. Caterpillar, same with Caterpillar. We're up nicely. Now we're dripping our way back down into the value zone. I'm really going to watch Caterpillar in the next week or so and see. It's in the zone where I want to buy it, but just because it's in the zone, I need for a trigger to get me into the trade, and a V1, V2 trigger would be that signal. Canopy Growth, nothing on Canopy Growth today. Cisco, you can see it was much higher. I haven't had any trades on Cisco in the recent past, so nothing there. DDM, 6520 RSI, it was higher today. We're just kind of range bound and moving sideways, so nothing there. I'd like to see it come back into the value zone potentially. We did have a really nice trade here. Again, this is a mechanical trade where you stay in the DDM over the 200. You stay in it till it closes back below. We did enter here back on June 6th. And we phased out, moved sideways, phased out, and exited the rest of all of our shares up to here. But you can see sometimes, those breaks back above the 200 really do pay off. That was a really good trade for us. Diamonds, the same thing. Walt Disney, big day up today. We're to 66.89 RSI. Just nothing for me to buy here. It's just too high. So, first thing to look for Walt Disney is a pull back into the value zone. Like here. Here was a trade we took in the value zone. Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. Our initial stop would have been halfway of this bar. And so we did enter here, and we had a really nice stress-free trade all the way up to here and exited here. Etsy, we did take that yesterday. A half a position. We did hit one of our profit targets today. So a close under the 200, the close under the 100, that will be my initial stop on this going forward. And if we bounce at if we bounce at the 100, close back above, and it's still halfway above this bar, then I will add my second position. Ford Motor Company, nothing there. Facebook. Boy, what a run on Facebook. I was watching it earlier and it was under the third ATR channel, under the 70 RSI. I wasn't going to short that, but I just made a mental note that that might be a near-term top. But now that we're back above that, who knows? Anybody's guess. Five Below, nothing really there. It did tag that one ATR channel and immediately reverse, so nothing on Five Below. Gold is strong today, just the silver is. So nothing on gold right now. It's just, it's above the channel. It's in a high level. I prefer to take the signals when nothing a lot is going on. When you're in the value zone, we did take this trade. We took out that fractal. We had a 520 cross, just like the cross we're taking today on silver. And you can see that was a really nice, easy trade for us. We phased out all the way up to about here. Google, boy, Google's been a tough one for me. We did buy here on a crossover. Next day, it went our way. It rejected that high. It rejected the 200. So I did actually just get out of that for a one-day profit. Next day, it closed strongly above the 200. So I did rebuy it. And then the next day, it closed below. So now we're back above the 200. I don't think I'm going to take this trade. I mean, you could, but the problem is for me anyway, is you have the third ATR channel up here. My initial stop would have been another close below the 200, but now the reward portion here to here is a little bit bigger than the risk portion, but I think I'm just going to let this one go. I mean, it's a legitimate trade, but just the filters I use, I always key off of the third ATR channel, so I'm going to let this one go today. Goldman Sachs. Nothing really there today. In order to get interested, I want to buy something back in the value zone. Just an example is another trade we took here. I did buy Goldman Sachs here when we had this nice close above the 200-day, and we also took out this fractal high with two lower highs to the left, two lower highs to the right. We did buy this here. We had a beautiful 2 or 3 day, I think it was a 3-day trade on this, but that was really, really nice trade. Sometimes these trades don't last that long. They last a day or two, and then sometimes you'll get trades that last a month. So nothing on Goldman Sachs today. IBB had that nice strong break above the 200 yesterday. I decided not to buy it because the volume was pretty low compared to the 2 down bar days. So nothing on IBB. Intel has been battling and having a lot of resistance at that 200-day, so nothing there. The Russell we have hit the 1 profit target today. Coca-Cola, nothing today. We did, again, we took a signal here when it was in the value zone. We had this V2 entry, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. I actually took this intraday right about here, but this was a 2-day trade for me here, and I got out when it rejected that previous high and closed below. So that was a nice 3-day trade, but nothing in Coca-Cola right now. Lockheed Martin did test the 70 RSI at one point today and the third ATR channel, and it looks like it's going to give it up. So I'm not going to short this, but these are the kind, if I was going to short, these are the kind of signals that I would look for. Rejection of the third ATR channel, rejection of this previous high, and a loss of the 70 RSI. So I'm not going to do anything with Lockheed Martin, but just wanted to point that out. MasterCard MasterCard did reject the 70 RSI today, and it also did reject the third ATR channel. So that looks pretty bearish. If I was in this trade right now, I would certainly get out of it, but I'm not in it. But I certainly would not initiate a position. We did, I talked about Facebook being over the third ATR channel, being over the 70, and then it closing below at one point today. Well, this is exactly why I actually did short MasterCard here, and you can see that was a really nice short back into the value zone. Then we had a V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1, and then we rode it back to the upside, scaled out about 50% here, and then it moved back down on us. But this was still a nice profitable trade. 3M, I'm looking for that to test the 30 RSI and to test the third ATR channel, but nothing on there today. Merck, so this is interesting now, folks, because we did make a new high. We did come back into the value zone. We are moving sidewards. So, the recipe's there now. Now we just need a V1, V2, spike down, and reversal. So nothing on Merck today, but going to be watching that in the future. Microsoft, it's a little too high for me on RSI at 64. Did trigger that fractal there, which could be a good sign, but not enough for me to take a position here. Netflix had that nice bounce off the 200 all the way up here, but nothing there for me. Nike down a little bit today, nothing there. Philip Morris. So Philip Morris has been a tough one. I did buy it here when we had this break above the 200. Then I had to get out here when it closed back below. I am going to re-enter Philip Morris today because what do we have? We have a V2. We have day 1. We have day 2 that washes out day 1. We have day 3, which closes above day 1 and is also closing above the 200. So my stop will be any close below the 200-day moving average, even if it's a penny. And you can see I do have some room to the upside. So I don't know if this is going to go up, but if it does go up, I have some theoretical distance that I can go up with a small loss if I'm wrong. So I will be buying Philip Morris at the end of the day. PayPal, I am going to be exiting this today. It was a really nice trade from here to here, but it has rejected that previous high so far. So as long as it closes under here today, I'm going to just lock that in. The Qs, looks like it made a new high today. Nothing I definitely want to be chasing here at this level. If you guys are in the Qs, congratulations. You know, I prefer to get into a trade when I have a better risk to reward ratio, like here. Bought this on June 4th when we had this close above the 200. If it would have, the next day, if it would have closed below, I would have just gone ahead and gotten out. That's all there is to it for a very small loss. But this is one of those occasions where you can see I wrote it all the way up to here. I phased out, moved sideways, no phasing, phased out as it moved up, and then I exited the position right here. So, I mean, it was a massive reward compared to what the risk of the trade was. So nothing there. SPY, gonna buy that again with the overnight SPY position. Square had that big move up. Interested to see what Mount Doji is gonna do with Square. It is holding above the 70 RSI, which is positive. But if you own it, fine to hold it at these levels. But you wouldn't want to buy up here. Who knows? Maybe it could continue up. I don't know. But just the way I trade, I would not. Here's a good example of what's called a double bottom with the bullish divergence. Here you have a low. See the readings of the MACD bars deep. We have a rally. We come back. We make a lower low. The readings of the MACD bars very shallow. Next day, we trigger a V2. We go back up into the old range, making this a false breakout to the downside. We close back up into the channel. I learned this from studying one-on-one with Dr. Alexander Elder. They don't come around a lot, but when they do come around a lot, they're good trades. So as you can see, we entered here, we scaled out right up to about here, about a 14% move. So SSO, same with VIX. There is nothing today, right? It's just too high for me today. But the same with VIX. We did go under the third ATR channel, back over the third ATR channel, under the 30, back over the 30. If I had had to close back below the 30, I would have just gotten out. But you can see this was a great trade. We entered here, we phased out up to about here. AT&T. Well, certainly in a nice uptrend, just a little too high for me. It's a 73 RSI. So TLT did short here. Then it immediately went against me, started to go back down, and then I did get out here for a small loss. And, I was glad I got out. Next day it moved back up, but now it's going back down. But that's how it goes. Sometimes you enter a short and it goes right against you. You have to get out, and then it heads down and you're not in it. But we are back into the value zone. So, this is something we can take a look at going forward. If we can start moving sidewards in the value zone, get a legitimate V1, V2, that might be a long entry point. Tesla, big day today, but nothing there. Natural gas. Rejected that third ATR channel. Surprise, surprise. So nothing there. Oil, boy, it's a big, strong day up there. And it did take out this fractal. Don't think I'm going to buy this, but I have a feeling. This is one of those trades that's going to go, but I'm not going to buy something at the third ATR channel. Dollar sold off pretty strongly today. We'll have to look at this if it comes into the ATR channel. Visa rejected the third ATR channel, so nothing there. VIX, we have this, so my stop is a close under the 30 RSI, so nothing there. Verizon back up today. I did buy a half a position on Verizon here with this big strong bar up in V2. Again, it was a big, strong bar, so I only bought a half position, scaled out a little here, and then it puked back, so that was a losing trade. And today it's back up, but now it's range bound. I really don't want to do anything. XLE is having a really strong day today with the price of oil, but nothing there. Financial Select, up higher, close lower. Real estate, nice move, but nothing on real estate today. Utilities, nothing there. I can show you quickly though that you see how we have this high. See the readings of the MACD bars to the upside, pretty strong. And then we come back. See how we made a higher high now, but the readings are lower. That's a double top with a bearish divergence. So something to watch, but I'm not going to short this here, but just something to keep our eyes on in Healthcare Select. All right. And then Bruce Jorgensen sent me some stocks to look at today. I think we have time. So I want to go down through them quickly. So this is Accorda Therapeutics. I do like this in that, we've kind of had double bottom, not exactly to the penny, but in spirit. And then we had this nice V1 today where the price goes under the 1 ATR channel back over the 1 ATR channel. I do like that. It's a decent setup, MACD positive. The only thing is a $7 stock. And I don't like to trade those low price shares. So I'm not going to do anything, but good job on finding this, Bruce, because that is a nice setup. AGIOS. Didn't have a V1 or V2 here. Did bounce near the low of the 30. I wouldn't buy this today because there's no V1 or V2 there. So nothing on that. BioMartin, well, the buy would have been here, everybody. The buy would have been yesterday when we triggered this V1. I'm sorry, this V2. Day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. That would have been the entry right there. Would I buy it here now? Probably not. I don't like to buy after 2 strong days up. It got close to the 1 ATR channel and rejected it, so nothing on that. But that would have been the place to buy it yesterday. Lamb Research, kind of a kangaroo tail. It looks like we had a V2 that happened here yesterday. If I would have taken that, most likely I would be exiting this position today because of that negative price action. NVIDIA did have a V1 yesterday. I don't think I would have taken this though, and I'll tell you why. We moved up higher, we moved back down into the value zone, but there was no moving sidewards. I'd like to see at least a couple days moving sidewards. This was just straight up, straight down, and then back up. The best ones come when you have a higher move. You come into the value zone, you move sideways for a couple days, and then you spike down and reverse. But good eye on this, Bruce. It is a V1 in the value zone, and it would have worked out. What do I have? 7 minutes. Okay. This was a V1, but the V1 happened too high into the channel. NXPI. Kind of the same as what we just looked at. We had a higher high, we come back down in the value zone, but we haven't had any sidewards movement. It's just been down, 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 and then the V1. It's important. It's really important to have at least a couple days of sidewards movement showing that there's no more supply coming into the market. Paycheck did trigger a fractal here, did go positive here. Did trigger a V1 here. Yeah, it's not bad. Let's take a look at the weekly. Weekly, we're at the 1 ATR channel. Not a lot of volume. I'm just gonna let it go because I don't look at Paycheck that much. I don't know the personality, but it's a decent setup. And Zafkin. Right now it's a 2470 RSI. It's too low. But if we get a V1, V2 back into the channel, then I might be interested in that if it closes above 70. So closes above 30. All right, so we've got 5 minutes. So I already have my orders in. I'm going to buy a 1/2 position on AGQ based upon the 520 cross. We went under, we crossed back over. So this is going to be my trade. I am going to mechanically trade this like a robot. I'm going to, if the 5 closes back under the 20, I'm going to go ahead and just get out. That will be my initial stop. And if it continues and goes up, then I will phase out until I'm out of position. So pretty easy trade on AGQ. It's very, it's just one or the other. It's either going to close back below or I'm going to phase out until I'm out of position. So I'm definitely going to be buying AGQ today. Facebook looks like it's closing above. Philip Morris, I am going to be buying this as long as it closes above the 200-day moving average because of this V2. Here's day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. If it closes above 200. So if it closes above 79.96. So it gives me a small risk if I'm wrong and gives me a good reward if I'm right. All right, VIX is holding above the 30 RSI. I'll tell you, these market on close orders are the best thing ever. I cannot believe I have not been using these for years. I can actually enter in my positions during the day, and then at the end of the day, they're already programmed in to buy. Before, I might have 5 or 6 things I have to do at the last second. It was always really stressful. I've only been using this for like a week, and it's been really, really nice. All right, so yeah, Etsy's come back down. If it comes back down again tomorrow, test that 50 and closes back above, I'll add my second half. But if it closes under the 50, I'll just get out with the half position that I took. IWM, again, it's nice that we hit that profit target up high. PayPal, I have that programmed in. It definitely looks like it's going to fail at that previous high, so that will be sold at the end of the day. SPY, that will trigger and buy at the end of the day. And then VIX. So that's it. So I've got my PayPal, the Philip Morris, the SPY, the silver. Yeah, so everything's programmed in. That's pretty awesome. All right, and then after we close here, everybody, if you have any questions about anything I said, please just type it in. Don't be shy. I love that Mount Doji says, I still get surprised when I win so much that I don't know what to do next. That's like the funniest thing I've ever heard because it's so true. I know people like that, Mount Doji. I mean, honestly, with my teaching, I think I've told you guys this before, but I've taken some traders that have lost so much money and now they make money and it's a surprise to them. It's like, well, what's happening? This never happened before. So that's why I get such a giggle about when you say that. Scott says, short the Qs. I don't short a lot, Scott. I do sometimes. I've had a couple shorts, probably 3 shorts the entire time that I've had this live stream. 2 winners, 1 loser, but I don't think I'd be shorting the Qs there personally. Doesn't mean it's not going to go down though. JT says APA. Let's check it out. Yeah, it doesn't look bad. I do like that it was actually a V. See, it was a V1 yesterday, JT. It really can't be a V1 and a V2 in the same combination. But you see how
partially filled.
All right, so that's
Order
closure.
cancelled. Order filled.
But yes, good eye on that,
Order
JT,
filled.
because it does come down, move sideways. But not to be a buzzkill, but the V1, V2, when it did trigger this V1, it did not trigger within the value zone. It did not trigger within the 1 ATR, between the 1 and the -1 ATR channel. If I would have had a moved below the third ATR channel and then back over the third ATR channel with the V1, I would have taken it then. So, there's nuances there. But regardless, it would have been a good trade today, right? All right, so let me just make sure. All right, so now that the market's closed, listen, if anybody has any questions about anything I said, you want me to look at a stock, please don't be shy. Just go ahead, type them in the chat. I'll do my best to answer them and clarify them for you. But before I get to the answer portion, I do want to just put in a quick little plug for me. I do offer private one-on-one teaching and coaching and mentoring lessons in the evening time via Skype. I really do like to trade. I've had really good results with my clients. I've turned a lot of them around from being losing traders to winning traders. If you're interested in this, my hourly rates and my contact information are in the description of this video, or you can send me a message on Skype. No, not Skype, Twitter. I always get those mixed up. It generally starts just with the free phone call. I want to get to know you a little bit better. I want to understand why you got into trading, how it's going for you, what challenges you're having, what approaches you're using, and mainly what your goals are. And then I'll put together a lesson plan for you to help you achieve those goals. But I have had really good success. If you decide to become a client, be ready for a lot of questions, because during this live stream, I do all the talking, right? But in a one-on-one, after I teach you, then I turn the tables and I'm the one asking the questions, and I really make sure that you can teach it back to me so that you really know it. So I know that you really know it. So, all right. And then last but not least, if you could hit the thumbs up button, I would appreciate it. It helps me grow the channel. So it's just right down there, that little thumb thing. If you can hit that, I would really appreciate it. It does help build the channel. And there's a lot of people out there have a really tough time with trading. They lose money consistently. And I started this channel because I want to help them become better traders and not lose money. So, help me achieve that goal by hitting the thumbs up button and, possibly sharing it on social media or talking to people about it. Okay, enough of that. Whew. All right. Well, let's take a look and see if anybody has any questions for today. Johnny says, how wide would you set a stop for a longer trading position? 3 ATR? Yeah, that's a good question, Johnny. There's a lot of approaches for like a longer term trade. Is this just a general question, or is there a specific stock that you're thinking about? But a 3 ATR approach, that's going to give you a lot of protection to the downside. It's going to give it a lot of room to breathe. But if it was like a long term, really long term, yes, maybe using a 3 ATR stop would probably not be a bad way to go. But 3 is it's a little wide for me. Probably me personally, 2 ATR stop is probably the largest I would take. But if it's like a multi-year trade, I think there's been some studies done literally with just long-term trading, just using a 3 ATR approach, and I think the numbers penciled out pretty good. John says, the more I learn, the more I find that longer-term trading and investing works for my goals and time I want to devote to this. Hey, there you go. There you go. Yeah, I mean, you got to give it some time to breathe, right? And some time to grow. Even in an approach just like using the 200-day, staying in that thing as long as it stays above the 200-day is a good way to go as well, Johnny. All right, Johnny says nothing specific at this time. Yeah, what Johnny says is true. I mean, you know, you have to develop an approach that fits your lifestyle, fits your personality, fits your time frame. There's nothing wrong with long-term investing at all, just as long as you have a plan. Just like Johnny said, using a three ATR stop, not a bad idea as long as that's your plan. But if you start with the three ATR stop, then don't switch it around to four if it doesn't go your way. You know what I mean? So, we're all individuals. We all have our personalities. We all have our preferences as far as trading and time frames and risk and all that stuff. So there's really no one size fits all answer. But the one bit of advice I would give you, regardless of how you trade, make sure that you keep those losses small, and let your winners run. That's the key to profitable trading is management of your capital and managing risk. Weeks to a few months. Yeah, I think just for me personally, 3 ATR is a little bit too wide. But again, the larger the stop loss that you give it, the more room it has to breathe. If you do a half ATR stop, well, obviously you're going to get stopped out a lot more. Frank says, new here. Great stuff, Greg. Oh, great. Thanks, Frank. Frank B. Thanks for coming by and for joining the group. I really appreciate it. I hope you keep coming back. How did everybody do today? Oh, Mount Doji. What happened with that option? I'd like if you're still around, I'd like to hear that story. And how's everybody doing with their trading? You guys always see exactly how I'm doing, but I'd like to get an idea of how everyone else is doing. So I want to take a look real quick just for tomorrow. $298.61. $298.61 is where we got filled on our overnight. Right there for our overnight trade. And then we did buy Philip Morris. And we got Philip Morris at 80.28. And then we got AGQ. $24.39. Okay, so let's do a quick correlation check and see what kind of correlation. It's always important. Do we have too much of one industry? Well, we have silver, which is nice. That gives us some diversity. Not 100% stock market related, so we do have silver. We have Etsy, which is an online retailer, so that is tech. We have about a half a position. We have the Russell, which is mid caps. So then we have PayPal, which is tech. We did exit this here right here at the end of the day. So actually, we don't have PayPal anymore. We're out of PayPal. We did buy our SPY. We do have our volatility on the VIX, and we bought Philip Morris today. So yeah, I mean, we're not heavy in any one sector. We have a little silver. We have a little technology. We have Russell 2000 index. We have the SPY volatility, and we have a little tobacco. So yeah, I think we're looking pretty good on our correlations. Not too concentrated in one particular area, which is important, everybody. It's really important. JT made money. All right. Nice, JT. Proud of you. Johnny says, me too on all my accounts. Good for you, Johnny. JT, there's an earnings on July 24th on BA, so not selling puts. Yeah, you're 100% right. When I was looking at that, I was looking at the different expiration periods, and of course, earnings here is on 7/24, and so the next expiration was the 26th, and all of a sudden the premium went way high, and I was like, oh, that looks pretty good. But that's because that's the pricing in the volatility of the earnings. So yeah, it's a good idea not to write puts options on if you have earnings within the time frame. Frederick from France sent me a couple charts that wanted to go over real quick. He sent this a couple days ago, but I believe he bought this here when we had this higher low nice V1 within the channel. And that looks pretty good to me. It looks like he's up a little bit on the trade, but here we make a low, we come back up, we go down. The low is higher than the previous low. We wash out the bar, reverse back up, close above. I do like that one. He sent another one. This one I don't like as much. I mean, yes, here's a V2. We make a higher high. We come back down into the value zone, and we have here's a V2. Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above. But the reason I don't like this trade, personally, everything else is going for it, but it's just straight down. I like to see it move down. The moving sidewards part is very important before you have the V1 or the V2. So this one I don't like because the strong downward movement on that one. And then the next one he sent here. So let's see. Well, this is not a V2 because this did not close above. Makes a lower low. Maybe he was thinking about taking this as the bounce off the 200. I'm not really sure on that one. I don't think he's on at the moment, but Frederick, I'm not really sure why you bought this one here, but I do like this one, where we come down and then that big stab in reverse, and then it reverses back over all of the moving averages to the upside as well, and MACD is positive. So Frank B says, do you always work from the same watch list? I do, Frank. I mean, I change the watch list up every once in a while. I'll get rid of a few, put in some new ones, but generally that watch list is, all the major indexes, all the big monster stocks like Amazon and Google and Apple, the big moving stocks. But then I also like to have, some diversity in the type of companies that I have, automobiles, tobaccos, healthcare. So, we talk about this a lot, but I like having a list that I know the personality of each stock. A lot of people use scanners, which is fine. But the reason I stay away from scanners is that a lot of times it pulls up stocks that I just have no idea about. I mean, the technicals, if they look good, that's fine. But I like trading stocks that I've heard of, that I know of, that have a lot of institutional support, that have liquidity. So the answer to that question is majority of the time. Every once in a while, I'll find something new, like Five Below. I took something out, added that back in. And then I have gold and oil. And, it's important to look at the interplay. And that's why I like having the same list. I like to see the interplay between what's gold doing, what's oil doing, and compared to what bonds are doing, and how is that affecting the stock market. For instance, if the market was going up really strongly, but the VIX was also going up strong, that might give me some pause. Do you know what I'm saying? So I like to have the same stocks and the same commodities, bonds and gold and oil, and by looking at all of those each day, I get a sense of the interplay between them. Frank says, I think that's important also. Yeah. Man, there was something else that I was going to go over with you, and I forgot. I forgot what it was. Hopefully I'll remember for tomorrow. So yeah, interesting day today. We did add silver. We back in Philip Morris. We'll see what happens with that. Dr. Jorgensen says, good hike with the new puppy. Thanks, bud. Appreciate it. Hope you have a good time golfing today. I'll talk to you later. Um, and then we got rid of PayPal. So we did add silver. We did get rid of PayPal. We're still in VIX. And we entered back into Philip Morris with that V2 close back above. Yeah. You're welcome. You're welcome, Scott. All right. So last call for earnings. Oh, Vishla Patel. Hey, how you doing? Do you have video for moving average study you use? Yes, I do. As a matter of fact, Mr. Patel, if you go to the description of this video, you will see my recommended lesson video section. There's 4 different links to my YouTube channel, and there's 4 different types of lessons. The first lesson, I think it's called My 7 Different Trading Approaches. That's a really good one to watch because that one goes through all my different setups, including the moving averages. So I spend a lot of time on moving averages in that one. Then I have another video that talks about V1s, V2s. I have another video that talks about phasing out, of how I phase out of my positions. And what the heck's the last one? Okay, we got the 7 different types of setups. Oh, and what indicators do I use on the live stream? So there's 4 lessons, 4 links, 7 different types of stock trade setups. What indicators do I use? There's the lesson on the V1, V2s, and then there's also the lesson on how I phase out of my positions. So yeah, that's why I made those. They're in the description of this video. And if you get some time, take a look and listen. I think it'll be helpful. And I do spend a lot of time on my moving averages. Also, video about how to trade orders in Trade Navigator. Well, Mr. Patel, I don't place my orders in Trade Navigator. I know it's you're able to do it, but I use Trade Navigator as my charting platform, and then I use my online broker, which is Interactive Brokers. I use them to actually execute the trades because it's a really low price, and I believe Trade Navigator is higher on the price. And it's, kind of as an aside, but it's important, everyone, to make sure you have a good low cost broker because those commissions, they really add up. But yeah, I don't place my trades in Trade Navigator. JT says, what's your opinion on the gap in XOP? XOP? Well, I mean, listen, gaps are, gaps give you a direction, an idea of where the direction is going to be. I'm a little hesitant to trade gaps. I mean, but yesterday, this is kind of as an aside, but you see how we make a new high? See how we come back down in the value zone? We really, really, really move sidewards. And then we have this nice V1 that washes out and triggers. That was your entry right there, JT. And that's why I was saying V1s and V2s are not created alike. You really want to see them go up, come down, move sideways. That's the important part. And then trigger. That's probably why you had that gap, was because of this nice V1 here. Would I enter this today? So here is my approach if I'm not in before the gap happens. If I see a gap, but I see something that I like, my stop will be a close below the low of the gap up day. That's a good approach to if you want to get into something that's gapped and you don't want to wait for it to possibly come back down. So, that's how I would handle this. Would I buy this here right now? Probably not. I would have bought this if I would have seen it, because it's a beautiful move up, move back down into value, sideways. See that sideways movement? And then the spike down and the reversal. That would have been the entry right there. But would I buy it here now? Probably not. Probably not. It's up to the 1 ATR channel. I don't really like to buy too high above the 1 ATR channel unless I have other indicators, like if there was a 200 there or something like that. But if I was forced to buy this, my stop would be a close below the low of the gap up day. But that's a beautiful example of a V1. Everybody look at this, get it in your mind. Higher high, move back up into value, sideward, 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 spike down, reversal. That was your entry right there. I would have taken that in a heartbeat, JT, if I would have seen that. Hey, you're welcome, Mr. Patel. You are certainly welcome. Yeah, good call, JT, on that XOP. I mean, what a beautiful example of a perfect V1, man. I can tell you're going through your charts, you're doing your studying, and that's what it takes. All right. All right. So listen, if you guys have any other questions, feel free. You can email them to me, or you can send them to me on Twitter, and I'll be happy to respond as soon as I can. All right. So, all right. Well, I'm going to get my hiking boots on, and I'm going to head up into the mountains and enjoy this beautiful day in Utah. So thanks. You're welcome, Johnny. Good show. Thank you. I appreciate it. So thanks to Johnny. Thanks to JT. Thanks to Mr. Patel. Thanks to Dr. Jorgensen and Frank B. Nice. I'm really glad you came by today. And Johnny and Scott Montgomery. Good seeing you. Mount Doji. Good seeing you. Steve Burns. It's an honor. Thank you, my friend. Really appreciate you coming by, and I appreciate your words of wisdom that you post in here. And then Andy, good to see you. And I think that's everyone. So, and Frederick, I know Frederick's going to be watching later. So, all right. Well, that's it. Thanks for coming by, and we will be here tomorrow, and we will do it all again. So, study up on your charts, and go out and do something nice for somebody today. Give them a wave, give them a smile, say hi. You might make their day, and it might improve their day, and they might go on and improve someone else's day. So it's free, and it feels good to do, right? So thanks, Frank. Appreciate it. All right, everybody, take care. And on the way out here, I've got to play this legal disclaimer again, but hope to see you tomorrow during the last hour of the market. See you later. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit, No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.